Is PayPal, which operates in over 200 markets and supports transactions in 26 currencies, still a top choice for digital payments, or has it lost its edge? Well, if we look at the recent results, we see that revenue is up by 8.2% year over year, net income is up by 9.6%, but cash is down by 15.2% in the last 6 months, and debt is up by 0.5% in the same period. What is interesting, the stock price is going up much faster than the revenue. Since January, it is up by 36%. So let's analyze and value PayPal to understand, is it still a strong company and is it still cheap enough to become a good investment opportunity? If you were to invest $1,000 into this company at its IPO in 2015, you could buy 29 shares, and now they would be worth around $2,355. And that is a gain of 135% since 2015. Not bad, but if you would sell it at its peak in 2021, your return would be around 752%. But since that time, the stock is down 73%. Quite a swing. Individual insiders, that is an X, 0.2% of the company is owned by individual insiders. And we would like to see this number over 2%, so the management does not have its skin in the game. And are individual insiders buying? That is also an X. We see a number of sale transactions from insiders in the last year. And the super investors own this company. That is a check. There are 8 super investors that put their money into this company. And in this group, we see Pat Dorsey, David Rolfe, or Francis Chu. And are super investors buying right now? That is a check. Recently, they bought 740,000 shares and sold 260,000 shares. Return on invested capital, that is a check at 11.6%, 10-year median returns, and we want to see this number higher than 10%. And what do we know about net profit margin? It is also a check averaging 14.6% over 5 years, and the industry median is 7.2%. So a nice result, but it is nowhere near companies like Visa, MasterCard, or Adyen. And now let's take a look at share buyback. It is a check. They bought back 11.9% of shares since the IPO. That is very good, especially for long-term investors, because they own a bigger portion of this company thanks to such practices. And the debt? It is an X. It would take just over 2 years to pay the long-term debt with a recent free cash flow. And we want to see it under 2 years, so it is just over the number we are looking for. I have to say that PayPal has a nice financial health, but let's see, is it also growing? Revenue growth, that is a check at 16% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so that looks promising. And free cash flow growth, that is a check at 10.3% in the last 10 years. So it's just over the 10% we like to see. And earnings per share growth, that is a check at 16.9% in the last 10 years. And this result is partly due to share repurchases. Well, it's checks all around. This growth may not be out of this world, but it is a solid result. PayPal does not pay any dividends. Instead, they reinvest their cash into growing the company, acquiring other businesses, or repurchasing shares. Price-to-earnings ratio is 18.8. That is a decent ratio, much lower than the average for the S&P 500. So maybe, just maybe, PayPal is nicely priced at the moment. Well, let's find out by using a discounted cash flow analysis and creating 3 scenarios of its future growth. So, in the low scenario, we will estimate a growth of 10% for the first 5 years and then 8%. In the medium, 14% and then 12%. And in the high scenario, 16% and then 13% growth. So the low scenario is predicting that PayPal will grow slower than the industry. Medium is showing a story in which they will grow with the predicted growth of payment industry, which is 14.5%. And the high one is anticipating that they will continue to grow at a similar pace we saw since their IPO. So, with such estimates, the intrinsic value in the low scenario is $92, in the medium $124, and in the high scenario $139. But we have to always apply a margin of safety to those prices, and I use a 30% one. And with such a margin, we get in the low scenario $64, in the medium $87, and in the high one $97. And the current price is around $81. So only the low scenario with a margin of safety is in the red. PayPal looks nicely priced at the moment. We have here a company that has a nice financial health, nice growth, and an appealing price. Everything we may want from an investment. But we also should take into consideration that competitors such as Stripe, Square, or Adyen are getting stronger. But PayPal still holds approximately 42% of the global payment market. Their active users may be declining slightly, but transaction value increases steadily. If we open our Stock Ranking Pro, which you can get access to by becoming a Patreon, we see that PayPal is the 23rd cheapest company in the ranking. And when we filter the ranking to only show companies in the transaction and payment industry, we see that PayPal is the cheapest of them. It may not have such margins as Visa or MasterCard or such growth as Adyen, but it definitely is a company we may consider when structuring our portfolio. If you would like to learn more about MasterCard or Adyen, then check out my analysis of those companies. Thank you so much for watching and see you in the next one.